Hello, this is Paul Gibson with the Academy of Trading and Investing. I'm here once again with an additional video to help you to learn how to invest in the stock market. Today we're going to be addressing advanced candlestick patterns number 2. Hopefully you've already reviewed basic candlesticks as well as basic advanced candlesticks patterns number 1. That will give you a good foundation from here. In addition to these videos, you should also watch the videos on technical analysis, and there will be videos available to you also on underlying studies and overlay studies that will help you find great techniques to learn how to predict where stock prices are going to go. This is not a difficult science, but it is one that is important to understand relatively completely so that you don't make mistakes. So to begin with, just to reiterate, bullish confirmation means further upside follow-through and can come as a gap up, a long white candlestick, or a high volume advance. It might be a green candlestick, anything that's showing that we're moving in a bullish direction. Because candlestick patterns are short-term and usually effective for analysis for only 1 or 2 weeks at the most, bullish confirmation should come within 1 to 3 days after the pattern. So we'll take a look at some patterns, but then we'll want to see bullish or bearish confirmation depending on what we're looking at. So the same thing applies to bearish confirmation. Bearish confirmation means further downside follow through and can come as a gap down, long black or red candlestick, or high volume decline. This could be the opposite color from the bullish candlestick that you may be looking at. Because candlestick patterns are short-term and usually reliable for only 1 or 2 weeks maximum, bearish confirmation should come within 1 to 3 days after the pattern. It's a great thing to note that continuous daily monitoring of candle patterns and movements is wise and necessary, as conditions can and often do change rapidly. We don't want to think if we see a particular pattern that we're good to go for a long period of time, make a trade, forget about it, and walk away. Knowing when to buy and when to sell is very important, so that we want to make sure that we're getting in on time and getting out on time. That's the way we make money. Making a trade and forgetting about it is very, very dangerous. It's a great way to lose money. So, let's begin. Some of the patterns we want to discuss today begin with the piercing line. This is a case where we have a declining function, and we have then a longer bearish candle, longer than the previous candles before. And then we have a bullish candle where the opening price is lower than the previous closing price, and then the closing price is higher than the mid-range of the candle before. It's called the piercing line. We kind of pierced through the line of the average of this price unit, and therefore this could be a sign of a beginning of a trend change. So this could be what I call a pivot point. We want to make sure that we understand that we also need follow-through. So to make sure that there's confirmation, we would want to see an additional bullish candle here, and perhaps one after that. 2 or 3 days of bullish candles would tend to tell us that we have a bullish pattern beginning. Let's now go take a look at the rising 3-day rest, where we may have a bullish function going on here, and then we have some candles that kind of go sideways, maybe a little bit down, more or less sideways. We're not sure where that's going to go. Then following that, we then have a resumption of a bullish candle, taking us once again back in that bullish function. Again, we want to watch for confirmation. The shooting star. This particular candle looks like it could be an inverse hammer. So we could call it an inverse hammer. For a shooting star, it looks like it's coming down. This will be a black candle as compared to a white candle. Or if the bullish candle is green, then this candle will probably be red. So it's a reversal of the previous trend. We have a bullish trend going on here. And the shooting star is a potential pivot point indicating we may be reversing trend to start to go down. This could be a doji, could be a greystone, could be an inverted hammer, or a spinning top, for example. Any kind of trend change or color change would indicate a possible change in direction. The spinning top. These are candles that look perhaps like dojis, but they have a fatter body. As you may recall, a doji has virtually the same opening and closing prices in the same day. Where in this case, the opening and closing prices are a little bit different. So in this case, we have a bullish spinning top, and over here we have a bearish spinning top. Either one of these indicates possible market ambivalence. We're not sure which way the stock price is going to go tomorrow, but it could be a potential pivot point or a place for a trend change beginning. Stars. We talked about that in a previous video with morning star and evening star. Once again, a star is where we have a particular pattern going on here. This is a bullish candle. Then we have a gap up and a short fat candle. Could be a doji, but it's gapped up and higher than the previous candle of a different color. Again, potential pivot point or place where we begin a trend change. On the other side of that, we might have a bearish candle. A gap down, this would be called a morning star, with a candle of the opposite color going in a different direction. These can be, once again, pivot points. We're learning all kinds of patterns that could indicate a change in trend. A stick sandwich, or a candlestick sandwich. This is where we have perhaps a bearish pattern going on, then a longer candle, a bullish candle in between, and then a longer, even longer, bearish candle after that. This is a point of uncertainty. We're not sure which way the direction of the market is going, but it possibly could be an indication that there's going to be further bearish continuation here. So we want to take a look at this. Once again, we want confirmation. But it wouldn't surprise me that there is a bearish candle after this long period on this last day. Three black crows. This is kind of a fun little pattern. We have a bullish pattern going on here, then three bearish candles in a row. The clever nomenclature is three black crows. This is a very strong signal that we do have a bearish function beginning. Very strong signal. So this is a great place where if we were holding a stock, at this point right in here we might consider starting to sell that stock. Marching soldiers. This is kind of the inverse of the three black crows. We have a bearish function going on here. And then we have three bullish candles in a row. This is a pivot point, a very strong indication that we're now moving in a bullish direction. Upside two crows. We are here in a bullish function. Then we have a gap up, followed by two dark candles. This is an indication of a trend change. We would expect the stock price to go down from here. Not always, but usually. I think that phrase is very important as a stock analyst, to remember that nothing is perfect. There is no science directly correlated to stock market investing. All we can take a look at is probabilities, and the candlestick patterns gives us an idea of possibilities. Upside Tsuki gap. This is a potential trend change. So we have a gap up. Might be a bullish candle after the final bullish candle before the gap up, but then we have a dark candle afterwards. This is indication that there may be a trend change. We will wait for confirmation in the next position the next day. If we have a bearish candle, we're pretty assured that there's going to be a decline in the stock price, and that we're entering now a bearish function. The Sanku triple gap. This is a very interesting pattern. You don't often see this, but here we see three bullish candles coming off a bearish function, and each one of these is gapped up from the previous one, then maybe even a fourth candle. This is an indication of a very strong market movement, but it's also a beware point. It would be tempting to think that this is going to continue forever, but these things generally don't. When we reach this phase here, sellers are going to step in because they've made a lot of profit on the stock already. They're going to start selling it off, and this is where we can expect a bearish decline. Usually, once again, usually, but not always. The kicker pattern. This is where we get a very conservative bearish pattern, where there's not a whole lot of stock movement in each particular day, but it's still in a bearish function. And then suddenly we get some very long bullish candlesticks follow that. This is a kicker pattern. We would expect the stock price to go up significantly after this, but if it goes too high for too many days, once again the sellers are going to step in and start reaping their profits, the profit takers. We'll get into this a little bit later, but we want to look at our other oscillating patterns, both the upper studies and the lower studies that would help confirm this. We want to double check these levels, these price levels, to see if we're at support level here and possibly resistance level up here. We can guess where the stock price might be going if we look at those additional studies. We'll address that in a separate video. Bullish hook reversal. This is pretty obvious. We have a declining pattern in the bearish function. It seems to hit bottom, which we would call support. The stock prices begin to reverse. This is a classic sign of a reversal. Good time to get in. Buy stock might be in here somewhere. We'll talk about stock purchase strategies later, but this might be a good time to consider getting in. So this is a pivot point, a potential trend change. To me it's saying get ready to buy, possibly. Not necessarily buy now, just now, but get ready to buy. So this is a clearly defined ascent, followed by a clearly defined appreciation in stock price. Once again, this is the Academy of Trading Investing. I'm glad to be with you today. My name is Paul Gibson. I've been trading for 20 years and training other people to trade as well. Some additional information that might be interesting to you would be found on Notes from a Profitable Investor. It can be found on academyofti.org, and you will find a great expansion of these concepts there. Another reference might be Candlestick Charting for Dummies, great series of book, the For Dummies series. Or you might also go to stockcharts.com/chartschool to find some additional information there. Notes from a Profitable Investor is a great place to start your education, or maybe expand on your education in stock market investing. It's also available on Amazon.com or Amazon Kindle, which is a great way to be able to study as well. I'll look forward to talking with you another time in our next video.